Look, this economy has been a disaster for anybody that's not in the top 2 or 3% of the income stratosphere and the net worth stratosphere for a few years now. We are in an inflationary supercycle, largely because of excess spending. So a lot of people blame the Fed, and while the Fed definitely shares some of the blame, we had quantitative easing from 2010 to 2020, essentially, with a few breaks in between, and we did not have an inflationary period. It's only when this administration came in and changed the energy policy, declared war on fossil fuels, and then started paying people insane amounts of money to stay home much longer than they should have past the pandemic, plus setting out the helicopter money, plus the regulatory environment. The trouble in the economy lays solely at the hands of this administration. It is crushing the average person across America, and we are seeing that in the polls.
You know, Tiana, it's interesting because at the end of March is really when those benefits are truly expiring. LLCs, excuse me, from the Biden family. Why do you need all those LLCs? What businesses are these? No idea. Anybody can start an LLC, put some random name on it, and, you know, you can do business or not, whatever that business is. So for the
money there's a similar pattern in a lot of these where the money comes into America, into one entity, goes back offshore, and then when it comes back on, it's going into these various LLCs controlled by the Biden family. And what possible work could the Biden grandkids have done to earn money off any of these deals? And it's a lot is made of Hunter Biden's personal life and his drug problems, right? Mm-hmm. That in itself is what a lot of families in America go through. But it's, at the same time, we're supposed to believe he's this business genius making tens of millions of dollars on deals. In the case with this private equity fund with the Bank of China, where he got $1 billion commitment for a sole mandate. At that same time period, he had such a debilitating crack habit that his teeth rotted out. So how can a guy like that secure that deal if your father's not in charge of China policy for the United States of America? This is so blatant, brazen, influence peddling. It's so in your face, and now the FBI won't produce clear documentation that they know about it and have done nothing about it. We're very close to becoming a banana republic on a daily basis.
Well, let's bring this up. This 59. What do you make of these numbers that they just crossed?
Well, look, I don't know if we're going to get another rate. We're going to get another 25 basis points from the Fed in the next meeting. But I would say unless these numbers change dramatically, the prospect of rate cuts this year is very, very small. And I do not think that's priced in the market. A lot of smart people believe that by September, October, we'll start seeing the Fed go in the other direction. I don't think that's on the table unless these numbers change dramatically.
That's interesting. Tiana? Here really quick, because we've seen the markets obviously repairing losses right now substantially. We had a 65 point gain going into this number, these numbers, excuse me.
You know, we were slightly negative. You're still seeing some strength in the NASDAQ. You know, as we were talking about earlier off camera, the bulk of the gains in the markets this year have come from artificial intelligence. So the S&P's up about 8%. If you back out the AI-related gains, you're down about 2%. But right now, I'd say it's hard to go long the stock market because you have contracting liquidity, slowing economy, declining earnings, while stocks are trading at 18, 19 times forward earnings, which I think are too rich. The one kind of wild card that's getting a little bit discussion, and some people are making a big deal about, is the potential ratings downgrade if we blow through this June 1st. I remember when this happened in 2011, it was much of a much. There was a lot of news headlines about it, but it really didn't affect the cost of borrowing for the United States. And in fact, in my opinion, it made me, downgrade my reputation of the ratings agencies, because what's going on right now is you're looking to conduct fiscal restraint on Congress, on the United States government, so that they spend less money and become in a better financial condition. I know Joe was the head of a major, well, not the head of a head economist on a major trading desk during that time period. And I was just curious if you saw increased borrowing in the weeks and months after that downgrade that we saw from the last big debt ceiling debate.
The interesting thing is the 10-year yield actually rallied. Yields actually fell as the U.S. was downgraded. Keep in mind that one big difference between now and 11 was the fact that The rating agencies had already warned Congress in the spring that they were going to be on downgrade watch, and that was in part because we had the Tea Party. Boehner had a 49-seat majority, and they really wanted to push for more meaningful spending cuts than what we're hearing about now. We actually had budget sequestration back then, which actually did bite and actually had some effect in keeping spending down. And that may have been a reason why the yields actually fell, long yields fell, even though the U.S. was downgraded.